Cool.
I'm joined today by Steven Haas, who I've known for, I don't know, like, how long have we been chatting? A
Wow.
couple of years, I guess?
In a couple of years, yeah, for sure. No doubt about that at all.
Yeah. So Steven he runs a Facebook and Telegram groups called ASX Traders United. Steven, do you want to take us through maybe a bit broadly, your life story, and how
Wow.
you got into trading? Yeah, I mean, just the full, if you can make a documentary right now, that would be awesome.
Wow. Oh,
But,
good.
but yeah, just, generally your life story, and how you got into trading, like what led you into trading and that kind of stuff.
Sure. Well, I'll start with, I suppose, firstly, thank you very much for the intro. I've really been really looking forward to this because I've been seeing your interviews previously and really enjoyed all of them, Isaac. So thank you so much. And the way you actually conduct your interviews, absolutely top notch.
Thanks,
It's
Steven.
really fantastic. So overall, yeah, I'll start off in terms of, I suppose, where ASX Traders United was born. And I can't believe it's already been, wow, I was trying to think, probably about 7 years since we actually started the group. And
Wow.
I've been rapt that you've been a part of it for a few years yourself as well too, Isaac. But firstly, it started off when Chantel was actually the founding member of it about 7 years ago. And I still remember we were on one of the particular forums a number of years back. And we were just chatting away on one of them as a whole group. There was a whole heap of people who were just shooting rocket emojis all over the place, and everyone was going nuts about one particular stock, and everything was going, wow, it's going to do this, it's going to do this. And I remember Chantel, myself, and a few other people were just getting absolutely peeved about all of this, total over emotion and total craziness about what was going on about this particular stock. And we're thinking there's got to be a better way of being able to express how we're actually analyzing things and looking at things and being able to do it in a non-emotional way. And that's where ASX Traders United essentially was born. Chantel jumped off that particular board, created this this forum, and I jumped on board as well. And I said, look, I'm going to give you a hand with this. And before we knew it, we had around about 1,000 members joining up within a couple of days. It was that crazy.
Wow.
Over that, about a week or so later, so many more people were joining on board, and we thought, no, we've got to join this and make this a private group overall. And ever since then, we've just been creating this nice, relaxed, easygoing community kind of feel more than anything else. And that's how it's been for the last 7 years. And it's just been a real joy to be able to actually bring decent conversations, decent discussions, and just really, really relaxed, easygoing conversations that were going on in relation to what was going on with the ASX in terms of stocks going on there, and even bringing in some of the American stocks as well and worldwide stocks as well too. We've got a couple of other members who are talking about some Indian stocks at times too, and other things there that's going on. We even had a competition running over the past few years as well too. And I've actually just ceased that recently as well, though, just to be able to focus more on some of the other aspects. But I'm going to try and build some trading systems and things like that in the near future too. But it's been a real pleasure being able to actually bring this to the community because my own health hasn't been all that great over the last number of years. And it's just been a way that my own medical doctors have been able to say, look, try and keep your brain active because I've actually been suffering from long COVID for a number of years and the brain has not been functioning all that well at all. And the medical doctors have said, look, try anything you can do to try and basically keep your brain active. And this has been a really fantastic way. But what better way of being able to keep your brain active than thinking and thinking mathematically, thinking with numbers and keeping things going and also keeping things with routine. And I think that's been something that a lot of community members have really appreciated too. The weekly kind of updates that I've been able to provide as well to try and stimulate some activity and stimulate some discussion as well. So I hope that gives a bit of a summary as to what ASX Traders United is basically being all about. And I hope that provides a lot of value for a lot of people.
Yeah, absolutely. There's a lot there to unpack. So the first thing, was it GameStop? Was that the stock that was by any chance?
Could have been something like GameStop, actually, many, many years ago, probably around about 7 years ago, where everyone was just going rocketing and going crazy, actually.
Yeah, because I do
Time.
remember the GameStop thing, that because I was still trading prop back then,
Yeah, that was
and
probably
that
that
was around that time, I think.
probably around about that time, actually. And it
I'm just gonna
was,
look it up.
yeah, it probably could have been, because that would have been about 2019. Yeah. So that was just absolutely bananas back then. And there were just so many rocketing things at that point, and even here in the Australian market as well. There were just so many things, just going absolutely ballistic and bananas, and we just we just had enough of it, and we thought, no, enough of it. And so we really just said, okay, let's clamp down on all of this. And anytime there were any of these rocket emojis and people going ballistic bananas, it's like, no, enough of this. We just got to really keep it nice and relaxed, and let's just have a calm discussion about what is going on out there.
So it's a Lambo free
Pretty
forum,
much.
basically. Yeah. Okay. So GameStop was actually 2021, so a bit later, probably.
Mate.
But
Yeah.
yeah, GameStop was an interesting one because, like, I that was a point where I think a lot of the people, a lot of the professional traders that I was trading with, right,
Yeah.
were talking about people coming up to them and going, "I'm buying GameStop," like their friends and stuff going like GameStop, and it was at an insane valuation,
Mm.
and like all of us were just like, "Wow, okay,
Yeah.
this is crazy!" Like that was a phenomenon. That
And now what's it been doing over the last year or so? It's just been stuck in the doldrums in $20 or something like that over in the US. And that's basically all it's been doing. Nothing more. It's been
Yeah,
going
I
up.
have no
And
idea. I haven't looked at it for ages,
yeah,
actually, to be honest.
it's just been crazy. Yeah. But I think they've been saying, oh, yeah, we'll take over this, we'll take over that. I think they were trying to make a takeover bid for eBay or something recently. And it's just like, really?
Okay. Well, I do remember they raised money when on that spike higher, right? Because like when it gets to a crazy valuation, it
Exactly.
makes sense. You raise money because you're basically getting people to buy into the company at a too high a price, so it's good for existing shareholders.
Yeah.
But yeah, it's still actually surprisingly well above where it was. Like it was kind of, I don't know. I'll put a chart up after this, but
Yeah.
yeah, like below $1.
Yeah, and then it just went absolutely ham for quite some time, and then just come back down to earth reasonably, and then it's just like, yeah. But the good thing is, I suppose, with all of our discussions that we've actually been able to have on our ASX Traders United site, we've been able to bring together so much expertise from people who've got some good fundamental skills analysis, and also people who like to be able to analyze technical analysis as well. So it's not just a mere fact of being able to say one's better than the other. We can complement them all together, and that's the. And now it's even been able to culminate now in terms of twice weekly sessions that Yash and I actually bring together as well on YouTube together, and we're actually complementing together the fundamental and technical analysis together as well too. So we're loving it, and we're getting a ball with that as well too. So we're just putting new things together and bring more and more value, and hopefully we'll be able to actually bring in some more in terms of some more of those trading systems as well too, to bring even more value, especially in toward the Telegram.
So my impression is that you're more technical focused. Like when I see your posts and stuff, you seem to focus much more on the technical side.
Yeah, that is more towards my background as well. Yes, absolutely. Because when I first started out trading, which was, oh wow, I'm talking way back. Because yeah, I've just turned 50 myself.
Happy
And
birthday.
oh, thank you. I was a few months ago now.
Yeah, yeah.
But overall, when I first started trading and investing a long time ago, when I was about 18, um, I think like most of us, we all like to go off to a broker or off to an investor, investing house of some sort, and we say, look, I need some help to learn all about this, and I know nothing about all of this stuff. So what do I do? And we entrust someone. We entrust people that we believe that know better than us, and they say, oh look, we've got brokerage recommendations for you, and we can do this and everything there. Okay, no worries. What do I do? and they gave me recommendations. Back then, what was the recommendations that I was given? Macquarie Bank and CSL.
Hmm.
No worries. Here you go. Take my money and invest it. I think I lost 25% in both of those over the next 2 months.
Hmm.
Great. That was a big lesson, wasn't it? Right. Not doing that again. So that to me was a great learning lesson overall. I'm not going to mention the broker. But to me, basically, it taught me a really, really big lesson. And I'm pretty sure that people who are watching this right now as well will relate to that kind of lesson as well too. But at sometime they've probably taken a tip or they've taken some brokerage advice or something along those lines as well. And it's been along the lines of, that wasn't advice that I'd actually ever learned. And then they'll basically say, I want to be able to learn something myself, or be able to learn some of the tips myself as well too, about how I want to trade, what resonates with me. And that's the thing. One size won't fit all. Like for me personally, over the years, I've done many, many courses. I've done lots and lots of things overall there and found what works for me personally. But what works for me is not going to work for everyone else. We find what works for ourselves. But for yourself, Izaac, what's your preference? Do you prefer technical? Do you prefer fundamental? What's your story yourself?
It kind of like I've traded a lot of different things. So I've traded like government bond futures and equity index futures, and I've done spread trading. I'm mostly now focused on ASX equities. My default position is I always have to do the fundamentals. So the fundamentals are the primary thing for me always.
Exactly.
The technicals, like I can actually ignore technicals if I really like a fundamental picture. I just go, even if I think looking at the technical picture, it looks ugly and it probably has to, it looks like it's going to keep falling, whatever it is, and I'm buying, for instance. I'll be like, well, this is just, I don't want to miss it. So this is too big an opportunity. But like, I also recognize that there's a bit of a trade-off there. So, and technicals, it actually took me a long time to get better at technicals, because when you do spread trading, like some people say there's no technicals in spread trading. Like my mentor who like taught me the most about trading, he told me there's no technicals in spread trading. And multiple people have told me that, because it's not many people are looking at the spreads, and people who are looking at the spread between, products, like if it's say like the S&P 200 in Australia versus like the S&P 500 in the US, for instance, everyone uses their own beta, like their own ratio, for instance. So even if people are looking at their own technicals, they're going to be different to other people's technicals. So it becomes a really weird thing. But I do think there are technicals and spreads, but it's very different to what happens in outright markets, basically. So yeah, I'd say my default is definitely fundamentals. I love to, my favorite thing is to find a like a really undervalued stock, that's sold off for no reason in particular, or, just because the sector's like that, the AI sell off in the tech sector at the moment. There's so much good buying there at the moment. And also like, the pharmaceuticals on the ASX have also been hammered quite a bit, and there's some really good value there.
Yeah. A bit of a turnaround right now. Absolutely.
Yeah. So there's, that's definitely my favorite kind of story. Like, it's interesting, like when I see your, like the trades that you do, that you talk about, and you'll talk about things like the, what are the boxes again?
The Harvard boxes?
Yes, that's the one. Like you might take a breakout higher from them, for instance. I'm always looking for the pullback. So I'm always looking to,
exactly.
in terms of technicals, I'm always trying to buy a support level or something like that.
Yeah.
It's so unnatural for me, because the whole thing about spread trading is that you're looking for things that are oversold and things that are overbought.
Right.
and
Yep.
then, you're trading that relationship because they should have a strong relationship. And so the whole idea of buying a high for me is like, it feels so unnatural. And
Exactly. And you've proven my point exactly right too, because you're looking at things from a different perspective as well too. And that's what you've just described there in terms of data boxes is a completely different style of trading in terms of momentum trading. So that's
yes,
momentum trading in terms of all the way to the upside. And in terms of the way that you're describing things, you're talking about things from a value trading perspective in terms of looking at things from the underside and then waiting for it to go upwards. But that can also still be supported from technical aspects as well too, in terms of momentum driving upwards. Like for instance, you take a look at, say, the health sector, which is the example you just gave right now, that's now looking in terms of the swing upwards, and you can still get that in on a momentum trade going upwards as well. So there's so many different ways of looking at things. But what really matters at the end of the day, regardless of whether you choose technical versus fundamental, so that argument to me is a rather moot one because
mm,
everyone's you got to choose one or the other. No. They can complement each other beautifully. The biggest thing that everyone needs to really have a good decision on is what style of trading works best for them. You can combine them both absolutely magnificently, but the biggest thing to really take a look at is what style of trading resonates the best with whatever you wish to do. So, for instance, you could combine everything that you were just basically talking about there and say, look, I love value investing and I love turnaround investing. And then you can say, I like the fundamentals, for instance, in terms of the healthcare sector, knowing that it's starting to improve. And then you can confirm it with the technicals moving on the way up and make sure you're getting the trend on the way up with the momentum pushing it all the way through. Which is exactly what you're seeing right now as we're speaking in terms of June, July of 2026, which is when we're recording right now, in terms of the healthcare sector here in Australia and even biotech sector over in the US right now, flipping upwards and moving its way upwards.
yeah,
Everything combining right together.
yeah. So this kind of leads into a good question. So, what do you think are the elements of a good trading strategy? Like,
Mm.
obviously, every strategy is different, and maybe you don't look at technical, or you do, or you don't look at fundamentals, or you do that kind of stuff. But like, what do you think are the essentials, and what are the kind of like most often very good to have kind of elements?
Yeah, I think what basically, this is the kind of thing that I'm really trying to bring into in terms of systems, building systems now, is essentially taking a look at, say, almost like a sector top-down analysis as well. Like you've probably been seeing a lot on the Telegram aspects as well recently, that each week there's also that sector breakdown aspects as well. Like there's a bit more of a breakdown of, oh, no, there's these particular sectors now appearing stronger and these sectors are appearing weaker. So there's that breakdown that's going on there as well too. And also the on balance volume that have been publishing each week as well there too. So you can see that certain stocks in particular is more suggestive of a positive trend, more suggestive of a negative trend, those kind of things there as well. What we can do, because we've actually been building up quite a nice database in relation to that as well, ever since probably around about June of last year. So in terms of building up what's it called, a potential system that we can actually build from that, we can actually utilize all of that data, which has been building up over the past year, and actually now build it prospectively going forward to test to see how effective that actually is in terms of whether or not that's actually a useful system that can actually detect signals going in the forward direction based on the information that's been built up in real time. So that's going to be really fascinating to see whether or not that can actually be useful in terms of detecting some useful signal. So I'm hoping to be able to actually put all of that testing in forward motion and see what those results were. Say, okay, here's the signal. What is actually worthwhile in terms of what did it generate in terms of the result 1 week later? What did it generate a result 1 month later? Those kind of things. And the good thing is, once you've actually been able to develop a system like that, you can apply it to any signal that actually is of
Yeah,
interest to you. So that could be, say, a crossover of moving averages, or in the case of a fundamental aspect, maybe a switch up in an aspect on the balance sheet. So all of a sudden their profit earnings ratio is actually a heck of a lot better compared to what it was in the previous balance sheet. Those kind of things could also be worthwhile too. So a whole range of aspects. But it really comes down to what is the preferred methodology that someone actually has in relation to their own trading. So if you've identified something that you like in particular, say that turnaround in the healthcare sector, for instance, that you've noticed, what was a particular element that you identified that specifies that was an actual turnaround in the industry? If you know what that particular element is, then you could plot that into the system that you wish to build. They're the kind of things there. So if you know what actually identifies that turnaround, then you've got your system.
There's so much stuff to get into here. So
exactly.
Yeah.
You could make a whole series of episodes on this, depending on.
Yeah. So I've got so many questions. So the first one would be like, you mentioned testing, so back testing or forward testing. Is that an essential element to a I want to say trading strategy, but I also just want to say trading, because you can trade without a strategy. So is back testing an essential element to trading?
I think there are a lot of traders out there who will say it is essential. I'm of the camp that says it's not.
It's definitely not, but continue.
Yeah. you might actually be saying, Steve, what, really? Come on, you can't be serious. Because a lot of traders out there will probably say, oh no, you've got to back test until the cows come home before you do it. But the problem with back testing until the cows come home is you will form fit everything to be perfect. That's the problem. And when you make everything absolutely perfect in your model, you'll look at the model and you'll go, oh wow, this is absolutely beautiful. This is fantastic. It's bound not to fail. And then you go out into the real world and you put the trades on, and you might hit a bad streak, right? You hit a bad streak for God knows how long. And then it's just like, all this hard work I've put in, oh, this is awful. I've wasted all my time. Why not, if you've got a particular theory in mind, put on a few trades, but make sure you limit your position so well that it's not going to absolutely burst the bubble and break your account.
Yeah.
Try it a few times. Is it really going to hurt you? No, this is I think the biggest problem with a lot of people who want to try and get into trading. They sit and wait, or they back test and they back test and back test until they've got something absolutely perfect, and they feel as though, oh my gosh, I've got something that's going to do good now. Now I'll get out there and do it. And they sit there in front of their computer. They're about to tap in. They go fantastic, and then they're about to hit the enter button, and they freeze because they've never traded before, or they sit there and they go, I don't want to lose. I'm sure, Izaac, look, you can agree with me on this. You're going to lose in trading. Right? You're going to lose. Yep. Not every trade wins. It's life, okay? The biggest thing we've got to accept is we're going to lose certain trades. It's how we manage the trades. That's the biggest thing. So if you're going to get used to it, or you're just starting out in trading, look, I'm not providing financial advice here. Neither of us. Okay, we've got to admit that. But the truth of the matter is we're going to lose in trades. It's how we manage it and how we manage our risk. So if you're starting out in trading, start small. Okay? So instead of going out there and buying 1,000 shares of Tesla and risking gosh knows how much in terms of dollars there, buy 10, buy 1. At least you're getting into the market, you're trying something, you're putting something on the line, you're putting some skin in the game. And okay, it's not going to be a massive amount that you lose if you lose the trade, but at least you're getting over the psychological barrier and you're getting into it.
Yeah.
And then the next time you put in 5 shares, the next time you put in 10, and you increase it from there. And at least then you're not frozen at the keyboard.
The good thing now is that there's so many low cost brokers. Like, I've got an account with Stake, and this is not an endorsement or anything like that, because it's good and bad from every broker. But
Australian broker.
They charge $3 like for a trade. So, and I think there's some that do like, I think CMC at the moment does like the first $1,000 of buy orders for free every day or something like that. And then you probably pay on the sell. But if you buy more than that, more than $1,000, then you obviously you pay and stuff like that. So there's a lot of options out there to test,
Yeah,
like relatively cheaply now.
try them out.
Like I started off when I started trading, I was with ComSec, and it was like $30 per side.
Oh, don't get me not again. Oh, I remember those days. Oh wow, it's so much,
Yeah,
no doubt. But
It's-
yeah, it's still, we're still getting ripped off here in Australia. There is
yep,
no doubt about that at all. And no, you go and take a look at the American markets overall, and they're not charging any brokerage.
yeah,
No, why are we getting ripped off? This is nuts, okay? And this is something I've been bantering around for years, and we just don't get listened to here in Australia. It's crazy. And I've been on the phone with brokers all the time, and basically saying, "What's the story here?" You take a look at some of the option brokers down here in Australia, and they're still charging $34 an options trade. What? Are you serious? This is ridiculous. Over in America, $1 per options trade.
yeah.
We are behind the eight ball. There is absolutely no doubt about that whatsoever, and we need to wake up to that.
Our
There's
whole our whole
no,
structure is different though. Like it's not just the brokers. There's like, the clearing, and we have a more centralized system as well, like for stocks in particular.
we're places. We're illiquid, and
Mm.
if we wish to actually get more liquid, and we actually wish to become even competitive to other markets, we've got to change our attitude. There's no doubt about that at all. In terms of if you wanted to trade options down here in Australia, the top 20 stocks are the only ones you could even really consider if you want to remain in terms of any form of liquidity. It's
Yeah.
ridiculous. Yeah.
When I like before I went full time trading professionally, I was working a day job and trading, just trading from home, before and after work, putting trades in, and that was on ASX CFDs. So there was actually exchange listed CFDs. And it wasn't like, I remember I put a bunch of trades on BHP that did quite well. Like it just had this period where it was in this nice upward channel, just buying and selling like several times.
Yes.
But that was actually like, it was still fairly, it was still probably like the top, maybe 20, if that you could really trade.
Yeah.
But man, it's such a shame that they didn't grow that market, and that they just closed it, because, if you want to short stocks, or if you're just trading and you're not interested in holding the actual stocks themselves, there's not much, there's not many places where you can express those kind of ideas for the ASX in particular.
I think the concept of day trading is starting to pick up a lot more. Like there's more day trading opportunities and all of those kind of aspects popping up a little bit more now, which is a good thing. And I think especially in today's market as well, we're actually seeing there's a lot more people who are not really holding stock anymore in terms of, say, for the long term, and especially in terms of the way that markets are a bit more choppy, especially this year and last year. You'll generally find that what's really going on is people are, say, maybe getting into strategies where they'll make 5%, they'll take the position off. They'll make a couple of percent, they'll take the position off. That is literally the kind of choppy markets we're basically in right now. People are not holding much more at this point in time, and that's been because of the increased volatility that's been going on over the last couple of years. Like right now, at this moment, you take a look at the VIX. The VIX is below 20, has been for quite some time. We're not in volatile markets right now, so to speak, even though a lot of people will banter that term around like there is absolutely no tomorrow. But really, we're not in volatile markets. You compare them to times when the VIX is above 20, these markets right now are actually really, really calm. But, you and I have been in markets where the VIX is really, really high, and it's just like, whoa, okay, bid and ask spreads are as wide as a truck, and you cannot place a trade on. That is the difficulty in terms of those circumstances. Now, a lot of people who are new to the markets right now are thinking, "Oh man, I can't put a trade on. This is really hard." Try those markets.
Yeah.
Then you know you're in amongst the sharks. There are some really strange times when that actually occurs there. Right now, this is actually really, really relatively calm.
Mm. Yeah, it is. Like, I actually stopped spread trading and kind of professional trading because the markets basically, like, I was primarily trading bonds and equity indices, and because of all the QE money, like, there was just so little volatility, and probably the rise of, like, just, automated trading systems as well. Like, I was using a fair degree of automation myself, but
Yeah,
it's like the volatility just got so dead. And, you used to go for like a couple of ticks in like our 10-year bonds, for instance, or, even like you might get 3 or 4 or 5 ticks in a night. And then it just, it slowly grinds down to, you're taking half a tick like in the spread, so it's like a T node or two. It just got so, like, yeah, just the volatility got so low because of that constant QE money that was just slowly, the market would just slowly grind up on less and less volume. Because who's going to sell? Like, no one thinks the market's going to fall when there's
no,
all of this money constantly coming in. No one thinks it's going to fall. So any dip is a buying opportunity. So everyone rushes in to buy it, and then they're just trying to recycle their money, take their tick or two. And that's like the worst, because you can stand in front of the steamroller and collect, T-note ticks, all month. And then at the end of the month, a blowout might happen on you know, we didn't have Trump commentary back then. Oh, well, actually we did towards the end of my trading career, but it can be anything. It can be a bond syndication, or like, there's so many different little things that can happen that can just blow out your month.
yeah,
At the end of the month. And the great thing about volatile markets is you have the opportunity to make your money back. Because
yeah.
in dead markets, if it goes against you, like, where are you going to make your money? Like, you've got to find somewhere to make your money.
Yeah, I know people hate volatility, but it's like that's what makes the markets.
Hmm.
If you've got volatility going along, you at least get some of the spread, you can at least get something moving. And then when you actually have prices moving, that's where you actually get things that you can actually work on. And now you've got the spreads working around. You can work with the options, you can work with the futures, you can work with the bonds. Like, you would have been loving it right now, especially with the yen. The movement
Yeah.
was like that over the last couple of days. Bang, that gets your volatility going. The US bonds went crazy. Boom, everything's going along in terms of movement there. So volatility creates opportunity.
Yeah.
That's the kind of thing that us traders who've been in the game for a long, long time, we look for that kind of thing there. And then we can say, right, opportunities are coming along. Now we can take advantage of it there. And you start seeing the correlations coming through. That's the kind of thing that you actually want to see. And then you can see the movements coming along. Like, everyone loves seeing the index is going up and up and up and up and up and up. But it's like, that's not the time when you actually really want to see all the different kind of moves going on. That's where everyone gets into a lulled sense of security. Like, no. We want to actually start seeing some actual movement going along, and then you can start seeing some dips and everything happening. The spreads coming along, and then the movement coming along with the extra volatility. That's the stuff you really want to see.
Have you read the book Reminiscences of a Stock Operator? About
Livermore.
Sorry?
Is he Livermore?
Yes. Have you read that one? Yeah.
Yeah, actually, yeah, a long time ago.
So one of my big takeaways from that was, like, so the main character, I guess, Jesse Livermore, he made and lost, like, unfathomable amounts of money. Amounts of money that I mean, I could be wrong about this, but I don't think anyone trading, like, in recent history, if you brought that into today's dollars, I don't think anyone trading in recent history is making that kind of money, from what I understand. I could be wrong about that. But one of the takeaways for me was, like, he had a period of, I think it was like 5 years or something, where he couldn't make money. Like, he went bust right at the end of, like, a good period. And then he had like 5 years where he just couldn't make money because the markets were so dead. And this was back in, like, the early 1900s or something.
Yeah.
And like, I think back to that, I'm like, when we go through a period where it's like really dead, it's like, there's kind of two takeaways. Like, this might last 5 years, firstly, but secondly, it won't last forever. Like,
No,
something will change,
absolutely.
and the markets are always changing. There's a couple of things I wanted to just ping you on, because I was asking about what makes a good trading strategy, and we've kind of wandered all over the place. But
We have actually, yeah. Sorry about that.
no, that's okay. So, so you mentioned segments. You talked about, which I think is really good. So one of the things that I just wanted to jump in there on was one of my close friends and a guy I used to trade with. He came up with, not that he originated the idea, but he used to talk a lot about the idea of stacking edges. So if you've got an edge that's like, let's say you have an edge in terms of, there's other people who need to do things at the close and the open of the market, for instance. So there's brokers and funds that need to do stuff, and you're happy to carry over a session. That might be one edge where you can stand on the other side of flow. But then you might have another edge that's like the ability to read the book on a microstructured way. So you might have a tool that allows you to see when like big orders are repeating. So someone has some big business to do, and you might be able to identify when they've finished or when they're about to get more aggressive or whatever.
Yeah.
And then you might have another edge that's like what you mentioned, which is understanding what's happening with the segments, although that's probably a different time frame kind of thing. But stacking those edges, and I think that discussion about the segments is really important because it leads into this. Like, I think it's a really good thing for people to think about, like, what's another edge they can add on top? Like, don't get complacent and just be like, have your system that makes you, X amount of money. You have to be pushing for, how can I make an extra 1%? Because 1% becomes very meaningful over, a long period of time.
Absolutely. Yeah.
So that's one of the things I just want to touch on, that idea of stacking edges. And the other thing was, we kind of talked about testing, like back testing, forward testing. And then I asked you whether that was important or not. You said no. And I agree. It's not necessary, but for some strategies, it definitely is. But there's kind of like, one way of looking at trading is that there's kind of two different ways of approaching trading. One is through like experience and your senses. So like, watching the markets, understanding the markets, and drawing on your intuition. And the other is like on back testing. And so I've heard really good traders say back testing is a waste of time. And I've heard really good traders say, like, you have to back test. And if you haven't back tested, then, you're just waiting for a blow up kind of thing. So I think that's another important thing, the idea of like intuition versus like tested trading. And you can obviously do both, right? You don't have to it's not exclusionary.
Absolutely.
Do you have a sense, like, do you think, obviously you use technicals a lot, do you draw on your intuition much? Is it a strong part of your game, or are you more reliant on, like, are you trying to be disciplined and follow your own rules? What's the kind of breakdown, or how does that work for you?
Combination of both, I think. I think after a while, once you have a lot of experience in terms of the particular trading system that you prefer, or say like those edges, I'm going to combine both of those questions into one.
Yeah, sure.
Because the edges are really, really important. Once you know a certain type of style or a certain type of load of indicators that you really, really prefer. So say like, for instance, I was mentioning things like on-balance volume before, Ichimoku, moving averages, those kind of things there. If you can combine all of those aspects to knowing which particular sectors have the particular strength in that week or in that month or whatever the case is, you're going to have these kind of things going on in your mind, almost like those little wiggly antennas that you've got going, right? So you almost have that kind of that edge and know-how, so to speak, where you say to yourself, okay, well, hey, Right now, I know that tech has been going absolutely crazy and gangbusters, but would I really want to be putting all of my eggs in one basket in tech right now? Not really. I know it's been going A-OK. I can keep an eye on that if I want to do some day trading in that, but I wouldn't want to be really stacking everything 100% into that. But in the meantime as well, I also know that, say, the XLC, which is the communication sector, has been quite weak right now. If I was having a look, say, like if I was doing some day trading in the US, for instance, if I was doing that and I was looking at, say, Facebook and Google, for instance, which are components of the XLC, and I was noticing a weak intraday trend going on with that, I might apply some of those indicators that I was just talking about there and have a look and say, okay, well, is there an intraday trend that's actually going towards that, knowing that the sector of XLC has been relatively weak recently? And if that applies in terms of some of those indicators, then I might say, well, you know what? I might be able to apply a short-term intraday trade on that. That might be something to be able to look at there. But also knowing that retail in itself is actually starting to turn around, and the same with the biotechs right now. They're actually going really, really strong. So if those kind of things are actually moving in the upward direction in the same thing, and those sectors are performing well, then that gives me that kind of edge to be able to say, well, I'll keep an eye out for those intraday. And if they're starting to go well with my indicators, then I can always look at those. So that's combining those edges of the sectors, knowing which ones are actually performing well and which ones are not performing well, and looking at those and combining those with the technical know-how that I've got, and knowing that, okay, if all of a sudden there's a big volume spike intraday, then I can look towards those kind of areas and then be able to work with those and then be able to say, right, these are the kind of areas that I could look into if I notice particular setups that I favor working on those. And that's where the intuition comes into it as well. If setups come into play, fantastic. Does it look as though it's going to start to form a new higher high today or a new lower low, depending on which direction I'm looking at there? So yeah, it combines all of those things: the edges, the intuition, the technical know-how, all of those different factors there, and the experience as well to be able to bring it together. But also the risk management, most importantly. That's the big thing on top of it all too. Because otherwise, if you don't have the risk management there, you'll blow your account completely.
So what's your approach to risk management? How do you think about it?
Well, depending in terms of your time frame, and that's what it really, really comes down to as well. If you're thinking more long term, well, then essentially you can play a lot more with your long term account, and then basically say, okay, well, hey, you've got 100% of your account. You never risk any more than, say, 1 or 2% of your entire account on any one trade. That's fair rule number one, as a simple thing overall there. So you always look at that. At least in that way, you know straight away emotionally upstairs, if it goes against you, no major problem. You haven't got that emotional problem going on whatsoever, that if it does turn against you, it's not going to kill you if it went against you there. You could be always risking a heck of a lot less than that 1 or 2% as well. No big deal. But at least in that way, there's no major issue. And there may be a certain set amount that you've got as well too, that you may not ever want to risk any more than that as well too. But also when you're taking a look at, say, the chart itself, the chart's always going to tell you a good storyline as to what's going on there. You may be able to actually position size accordingly, depending in terms of another area of a swing area or something along those lines there. You can place your stop underneath that swing if you're going in the upward direction. Conversely, the other way around if you're going downwards in terms of the short. So there's so many different ways of looking at things, but it's a matter of having your plan. And you'd be surprised how many traders, and I'm sure you've come across this too, Izaac, how many traders you come across, if you ask them, what's your plan? What have you actually got going if it doesn't work in your favor? And they'll look at you and they'll go, I'm not sure what I'm going to do. You've got to have all of this set up before you even take that trade and before you even hit the enter key.
Yeah. Yeah, I think there are genuinely traders who, I don't want to put too much energy into this, but who kind of don't need a plan. Like I've known guys that will, and I've done this to some extent as well. Like you get into a position, like you see something and you just jump in, you're like, yep, going for it.
Yeah,
and then like the thing that you thought was going to happen doesn't play out straight away, and then you're like, okay,
damn.
what did I just do? Now I'm going to stop and think about this.
We all have. All have.
And now I'm going to do my risk management, you know,
Do it on the
after
fly.
fact.
Like, oh no, what's going on?
Yeah. Yeah.
We all have. Look, absolutely. We're all guilty of it. None of us are 100% perfect, but it's something we're all aiming to improve on as well too.
Mm.
But especially the long-term ones, you could be looking at this on the weekend, for instance.
Yeah.
And those long-term plans, you say to yourself, okay, I'm only going to get into it if it gets to this particular point. And when it does get to that point, okay, it activates that certain strategy there. Great, no worries. And if it does activate, I'm going to put my stop loss at this particular area here. Some people don't even use stop losses.
I don't use stop losses.
Oh,
I've
wow.
never used them. Actually,
up to you, mate. But
yeah.
okay,
I distinctly remember actually when I started, when I started into professional trading, day trading, futures on equity indices and government bonds. I started mostly on equity indices, and my mentor was like, he said something to the effect of like, if I see a stop loss in your book, you're fired.
Wow, that is interesting. Wow.
Yeah. And
okay,
so it was completely the opposite of like my understanding of trading. And actually everything that I learned there just changed how I thought about trading from reading books and everything like that.
That's fascinating. Okay, cool.
Yeah. Because it was just like, and it's not to say like you don't have risk management, but his whole thing was like, if the market blips down and you just get stopped out,
you can shake you out
for no reason, like you actually just missed a buying opportunity. That's where you should have put more in. Like you should be changing your, you should be making the decision every second, let's say, on am I in this or not? Has something changed? And so the whole thing was just to be constantly evaluating and thinking about the position instead of just having a stop loss in. But like having said that, I was a screen trader, a click trader. So I was sitting there, clicking. It's a very different style of trading to what most people do these days.
That's right. Yeah.
So most people use a lot more automation, and they're, actually this leads into another thing. So we were talking before about the elements of trading, and we touched on, we talked about intuition and stuff.
Yeah.
We talked about back testing. The other thing is that, I'm assuming you've read Market Wizards, the book Market Wizards.
Yeah, a long time ago. Yeah.
So Market Wizards is a great book by Jack Schwager. It's interviews with all these top traders, right? And, there's stuff in there. A lot of the stuff in there, they talk about their best trade, and they're all unique setups. And that book was written before there was like algorithmic trading, or certainly before it was a big thing.
Yeah.
But there's that thing too, like you can become very good at understanding all of the context and making trades based on where things are going to go and everything. Or you can have like a highly systemized, repeatable strategy. And the problem with the repeatable strategy is that markets change over time, and eventually your strategy will probably stop working, or someone else will muscle you out of it. But the problem with the being like looking at the whole context and trying to make a decision based on what's going on, where will gold be in 6 months' time, and where will government bonds be, and where will oil be, and all that kind of stuff. The problem with that is you can't backtest it. You can do some limited backtesting on it, but every situation is different. So it's very hard to backtest that kind of thing. Although I would say, Ray Dalio has his book Principles is a really good, kind of starting point for that kind of way of thinking, and just following him in general. He's got some, he looks at the big picture in a very robust way.
Yeah, he really talks about cycles quite a lot. Yeah, and how things change over time in terms of economic cycles, and that's an incredible outlook there.
Yeah, and so obviously core elements to what you do, you're doing your weekly scans, right? So you look at, I think weekly is quite important for what you do.
I think so, because it goes to show in terms of what the fluctuations are. Because, like you're saying, the market's dynamic; they change, and it's important to try and keep on top of when those changes occur, and see that the sector rotations are occurring as well. And they've been going on quite a lot, especially over the last year. And it's quite amazing when you do notice those sector changes and the rotations actually occurring. And when you're noticing those occurring as well, especially when things have been bottoming out and changing and all those things there. And we've been noticing that especially, in terms of the health sector in particular over the last couple of weeks and months in particular. Those kind of things, when you do notice those changes, you can position yourself accordingly to be able to take advantage of that. So when that actually does occur, you can say, right, I'm noticing that. I can see that change occurring. Same with retail; it's actually occurring recently as well. And we actually see on your scans that occur when a particular stock appears as well, and it aligns with the sector rotation, it gives you more and more confidence that something might actually be going on there as well too. So when things align and you go, okay, hang on, well, now it's picking up with the strategy too, then you just everything just seems to fall into place a lot more. And then you start getting those edges starting to come along there, and you get that kind of intuitive feel coming into it all as well.
Yeah. And so also OBV, you've mentioned Ichimoku. Are there any other tools? Do you look at intraday VWAP at all?
Yeah, intraday VWAP is a really, really interesting one there too. Intraday as well as yearly and quarterly. So when you take a look at the daily, you can actually have a look at it and see there. But you have to remember as well, with VWAPs and all of those moving averages and so on, these can tend to be areas of interest that actually are of major importance to a lot of traders and investors overall. They need to be confirmed, as with anything to do with technical analysis overall. The share price may actually approach these areas, and then it's a matter of how the market reacts. Very similar to earnings. Like, you take a look at that from a fundamental point of view. Earnings overall is something that fundamentalists always look at, and they go, oh, look, this is a major, major aspect that's going on. And how many times do you have a look at an earnings report? It could be the most stellar blowout earnings report you've ever seen in your life, and the share price plunges. Or it could be the worst earnings report that they've ever actually released, and all of a sudden, up goes the share price and goes crazy. It always comes down to how the market reacts to these things, be it an earnings report, be it an area of interest on a chart. That's the kind of thing we're always looking for from both fundamental and technical perspective, to bring all of those elements together, and then you get the holistic view for the entire stock.
Yeah.
And then that can also apply to the sector as well, because if it's a heavily weighted stock in that sector, then it's going to relate to the actual sector as well, and then bring about more of those changes there. And then that gets detected in on your weekly scans as well in terms of the sectors. So then you can actually pick it up on that as well too. And it all combines together in terms of your analysis.
Yeah. And so are there any other technicals in particular that you think people should be paying attention to, or that you think are useful?
I've been playing around a little bit, I must admit, with EMA 50 on the daily. That one's coming across as a very interesting one as well. So when that tends to actually bounce off from the underside and then bounce downwards, that tends to be a negative effect as well. And also when it bounces off it from the upside, that tends to be quite a positive tendency as well. So that's something I want to have a bit of a play around with a little bit more as well. Maybe do some systems testing on that as well too. But having a bit of a play around with that, even just with some small trades and so on like that's actually been relatively positive. Things like that. Even some MACD type of the studies have been quite good. And one other time frame of really major interest I've been finding a lot lately as well has been a 4-hourly.
Yeah, 4 hours, something that gets I know a lot of it's a bit of an odd one, isn't it? But a lot of people do look at the 4-hour.
Yeah, and for some reason, don't ask me why, but when you start noticing turnarounds on 4-hourlies, that seems to really, really does have a major impact, not only on things that trade on a 24-hour basis, things like your Forex, your cryptos, all of those kind of things there, but even on stocks as well. So it's very, very fascinating when you really start delving into it quite a lot. So yeah, definitely something to keep an eye on there as well. And that seems to work in terms of on the MACD as well. So that's a really, really interesting aspect.
So looking at the MACD on 4-hour bars.
Yeah, exactly.
Interesting. Yeah, I
Yeah,
haven't. Well, I mean, I probably have, I guess, looked at that at some point, but I can't remember looking at like. I don't use those technicals too much. Like I more use trend lines and support and resistance more than any
yeah,
other technicals myself. But
yeah. And a
oh,
simple support and resistance is really, really fantastic. Like
yeah,
you take a look at some people's charts, they've got lines left, right, center, and diagonal and flop flop all over the place there. It's like, what? How do you even see the price chart on that anymore? It's ridiculous. Just simple parallel lines. No, simple horizontal lines is more than enough in terms of support and resistance. And that can be enough. And just simply looking at those over a prolonged period of time can be more than enough to give you an idea as to what those support and resistances are.
yeah. Stephen, there's something you touched on early on when you're talking about the group, the forum group. It's like every time I say something and then we get into a discussion, I have more and more questions. So I haven't gotten back to it. But one of the things I wanted to talk about, because you talked about the nature of the group, like the Facebook and Telegram group that you've got, ASX Traders United, sorry. You talked about like the way, not having all the pump and dump stuff and not having,
Yeah.
and just having like a really robust discussion on ideas and stuff like that. As you were talking about that, one the thought that I had was like, like I'm pretty unfit at the moment, and I definitely need to do more exercise. And I could go to a gym, and I should go to a gym. I find gyms super boring, so I generally don't. But it's something
Well,
I should think about. Yeah. But one of the things that's off-putting to me is like, if I go to a gym, is it just going to be like a bunch of like, aggressive meatheads, right? Like, and I'm just going to be like, oh, geez, I don't want to be around these people. Not that, fit people are necessarily like that, but some people are like that. And so you can go to gyms where it just feels kind of awful to be there because of just, the kind of people that are there. But you can also go to gyms that are very chill, very inclusive, very encouraging, and not so competitive. And like one of the things I really like about the group you run is that you have created a really supportive and open forum for people to talk.
thank you.
And like trading groups are kind of like gyms. Like a lot of the trading groups you go into or forums you go into, there's just people talking smack about each other. Someone's put something forward and this is probably just social media in general, but it's definitely not lessened in trading groups. Someone might put an idea forward or ask a question, and then you just have like 20 people just jump on them and tell them they're stupid or whatever. You've been really successful at creating a very inclusive group. And one of the things I really like, I think one of the best things you've done is you have a section in the Telegram group at least. I don't look at the Facebook group so much, most of the Telegram, but you have a section there where people can ask for or can request technical analysis of a stock.
Yeah.
And I think just the whole idea of that simple thing of like people asking for help and asking for guidance being like a structured part of the whole thing is really cool, because a lot of groups are just, they're pretty toxic and they would turn away a lot of people. And you do see in that Telegram group, like it's smaller than the Facebook group, like it's a much smaller group, but you get a lot of people who like have obviously progressed quite a lot in their trading.
It has.
And you get to see their journey, and you get to see their own commentary and their own excitement about what they've managed to achieve. And they also are very appreciative of the group. So yeah, well done. You've done an awesome job of really fostering that environment, I would say.
That really means a lot too, actually, because having put that section, especially in the Telegram group as well, and really, but it's been a real pleasure and a real honor to do that as well. especially the work I've been doing alongside Chantel as well over in the Facebook group, because she's been an amazing moderator as well over on the Facebook group in particular. Because anytime we get any negative comments over there, straight away we're jumping on it, and we're basically saying, look, no, that's not to be tolerated. We do not tolerate any form of spam, for one. That's out the window straight away. Zero tolerance. You're out the group. It's gone. And also in terms of any negative comments overall, we are on it straight away, and we those comments are just gone and destroyed. We are there to provide full-on inclusion in terms of any discussions that are there, and I think that's actually fostered a lot of great collaborations and communications amongst the group. And I'm particularly really pleased in terms of the comments you made, especially about the Telegram group as well, because you are right. Some of the progression of some of those members over there has been astounding. I think you're particularly mentioning the gentleman from Perth who's on there, and I know he's actually really developed quite a lot, and he's been exceptionally grateful for all of the commentary and all of the help from everyone in the group. And that's been one of the big things, especially in Telegram. Everyone's willing to say, "Yep, this is what I think about this. This is how I feel about this overall." There, and it's never anything negative at all over there. In particular, it's just fantastic, and everyone's so willing to share their points of view. And that someone asks about something over there about a particular stock they're interested in, and look, it's never any financial advice or anything like that. It's all in terms of this is what people's opinions are. And it's just shared in a way to help people grow. And what better way of being able to do it? When none of us are 100% right all the time, it's okay. But this is the reason why. This is the reason why we describe it, and it's along the lines of this is our logic behind it, and it's fantastic. It just helps in terms of development. So thank you so much for that comment. It really means a lot. Thank you.
Yeah, no worries. We've kind of gone for a little bit. I feel like we're probably going to have to do another chat, and maybe
time you like, mate. No problem at all.
Yeah, maybe tackle some specific topics. Because I'm still like, we've been talking for an hour, and we were talking a bit before we even hit record.
Absolutely.
And I'm still like, man, I've got so many questions that I want to put to you, and so many things I want to discuss.
And open up to your audience as well. If they've got anything that we'd like to discuss here on the forum too, let them put some comments down below. And if there's any topics of interest that they'd like us to discuss, then by all, add it to the list.
For sure. Yeah. So, Steven, is there anything else you want to add, or do you want to tell? Do you want people to go and join any of your groups or follow you anywhere or anything like that? Is there anything you want to add on that front?
Oh, look, if they want to join in terms of ASX Traders United or anything along those lines, we've also got a YouTube community as well too that Yash and I present on. Yash is also a member of ASX Traders United, but we do that on a twice weekly basis in terms of presenting the latest and greatest of what's going on in the markets. So that's Strategic Markets on YouTube. So the easiest way, if anyone wants to actually check in on anything there as well, is they can just go across to my own webpage. It's called ivorywolf.start.page. And all the links are basically there. So you can click into anything that's along the lines there. But that's the easiest way of being able to do get in contact there. And if anyone wants to get in contact, then by all means, feel free at any stage. I'm more than happy to have a chat with anyone as well too. Pretty much an open book. But it's been an absolute pleasure having a chat with you, and look forward to another chat in the future whenever the time arises.
Yeah, thanks, Steven. Really appreciate your time. I'll put those links in the the comments, whatever it is.
Not a problem.
The words are escaping me at the moment. It's midday and I've only had 2 coffees, so clearly there's a problem.
Oh, I have another one.
Anyway, yeah, thanks so much for the chat. I really appreciate it, and look forward to seeing what you can achieve with the group and our next chat.
Thank you very much for your time as well too, Izaac. Have a great day.
Thanks, Steven. Appreciate it.